President Muhammadu Buhari, who has written to the House of Representatives informing the Parliament that the deficit in the 2022 Appropriation Act has risen by 965.42 billion naira to hit 7.35 trillion naira. Now, consequently, the president said the federal government would need to borrow funds to fill the gap. President Buhari therefore calls for an amendment to the federal government's budget and then the fiscal framework for 2022. According to the president, there have been new developments both in the global economy as well as in the domestic economy, which have necessitated the revision of this year's fiscal framework on which the 2022 budget is based. These developments also include spikes in the market price of crude oil, aggravated by the Russian-Ukraine war, significantly lower oil production volume due to the production shut-ins as a result of massive theft of crude oil between production platforms and also the terminals, among other issues. And away from the report now, Nigeria's currency in circulation fell by 42.43 billion naira between January and March this year. That's according to the latest report from the Central Bank of Nigeria. Now, the Apex Bank in its data on currency shows that the currencies, which stood at 3.29 trillion naira as of the end of January, fell to 3.25 trillion naira by the end of the first quarter due to the increased number of composed banknotes deposited by deposit money banks and the request for replacement of such banknotes by members of the public. According to the Apex Bank, the currency in circulation shows that a large increase in proportion of the Nigerian currency outside the commercial banking system was held by the general public, holding a lot of the new banknotes. It further warns deposit money banks against accepting mutilated naira notes, explaining that they are not the real currencies in the circulation space, adding that any composed banknotes discovered in the deposit money banks will attract a penalty of 400% of the value. And now in the real estate sector, the Canadian government is set to ban Nigerians and other foreigners from buying homes for 2 years as prices of real estate properties soar in the North American country. Now, the measure will help the country provide billions of dollars to spur construction activity in an attempt to cool off a surge in real estate market. According to international news platforms, Bloomberg, the ban would also be contained in Finance Minister Chrystia Freeland's budget today. The move signals that Prime Minister Justin Trudeau is also becoming much more assertive about taming one of the most developed world expensive housing markets. And the government is also growing much more concerned about the political backlash to inflation and the rising cost of housing. Home prices in Canada have soared more than 50% over the past 2 years as the market saw a record monthly increase in February as buyers acted ahead of rate increases by the Bank of Canada, taking the benchmark price of a home to about 69,300 Canadian dollars. However, the foreign buyer ban won't apply to students, foreign workers, or foreign citizens who are permanent residents of the country. Now, the chairman of the Nigerian Institute of Architects, Lagos State Chapter, architect David Majakodumi, has reiterated the need to domesticate the National Building Code to curb incessant collapse of buildings and other challenges confronting the building and construction industry. Mr. Majakodumi also made the call at a press conference in Lagos ahead of this year's edition of the Lagos Architect Forum with the theme, The City of Lagos, What is Lagos? Blessed Omonose has the details in this report.
The reoccurring incident of building collapse in Nigeria, though sad and heartbreaking, has been the major subject of discussion at different architecture fora across the country. This development has elicited concern from both government, the legislators, and even industry stakeholders in the building and construction sector. To this end, the chairman of the Nigerian Institute of Architects, Lagos State Chapter, architect David Majekodumi has expressed dissatisfaction in the handling of construction projects by unprofessionals, hereby calling on strict enforcement to the Nation Building Code to foster future incidents.
We've been partnering with the government, with other professional bodies as well, to domesticate the National Building Code. It's only when we have all these things in place that, yes, we'll avoid building collapse. It's high time that the government has to outsource enforcement, or what I might term as monitoring.
Speaking ahead of the forthcoming forum, the chairman has this to say on the rationale behind the theme of this year's event.
Taking it further from where, or the theme for last year, that where will Lagos be in the next 25 years? We dream, and we pray for a dream to come to reality. The government is trying, and as a professional in development control as well, we need to be seen. We need to be involved in the development of Lagos.
We are tired of building collapse and started working very seriously, tackling this and saving the lives of each citizens of the Lagos. This is a very important advocacy of inviting everyone to come in to discuss these matters with us, with our fellow colleagues, with allied professionals out there.
As industry players and practitioners look forward to LAF 2022, scheduled to hold in the first week of May, these stakeholders are hopeful that the issue of incessant building collapse will be deliberated upon and tackled head-on. Blessed Omonose, TVC News, Lagos.
And our shift in focus to the international front, stocks headed for a weekly loss today as the prospect of aggressive global rate hikes finally began to rattle investors, while bond fell to the lowest levels and the dollar looks set for its best week in a month. MSCI's Products Index of Asia Pacific shares outside Japan was steady in morning trade and down about 1.5% for the week so far. Japan's Nikkei also dropped 0.2% today to head for a weekly loss of nearly 3%. Now, a late rally also had lifted Wall Street indexes most modestly, but they are also all down for the week, led by a 2.5% loss for rate-sensitive Nasdaq. US futures were flat, and the Federal Reserve policymakers also ready to start cutting the central bank's asset holding from May, and also prepared to move rates higher 50 basis points at a time to curb inflation. Meeting minutes and remarks from officials showed this week. War in Ukraine and the shock wave it has sent through commodity prices, as well as lingering damage to supply chains from the pandemic, has heaped even more pressure on consumer prices and is adding to a sense of a major shift in trends. And now in this next report, European and Asian coal importers are expected to join the scramble for alternative sources of fuel as the European Union ban on Russian coal import looms. But with top exporters Australia and Indonesia having already hit production limits and major producer South Africa constrained by logistical problems, some importers may struggle to maintain supply levels. The expected rush is likely to keep global coal prices elevated, and the EU ban is to take effect from mid-August, a month later than initially planned, according to two EU sources following pressure from Germany to delay the measure. In top 10 coal producers, South Africa, Exxaro Resources, in a report says it has already received numerous requests from European countries wanting to sign supply contracts. It also says that it has the right quantity and quality of coal for the European market, but that the current production has already been allocated and that South Africa is struggling with its rail network, which also means miners will not be able to export more to meet the increased demand. And now the International Energy Agency, that's the IEA, on Thursday listed members' contributions to a 120 million barrel release of crude and oil products from emergency stockpiles aimed at cooling global prices following Russia's invasion of Ukraine. The release of stocks by the US allied members of the IEA, which is made up of 31 mostly industrialized countries but not Russia, would be their second coordinated release in a month and would also be the fifth in the agency's history to confront all market disruptions. It is the largest release from non-US IEA countries on top of the biggest release by the United States. Global oil prices are headed for the second weekly drop, with Brent falling about $10 to below $100 a barrel since the United States announced its largest ever oil reserve release in late March. In addition to a 60 million barrel release, the United States, Japan, the second biggest contributor, also saying that it would have to release a record 15 million barrels of oil. And wrapping up business news now, oil prices on the international market drifted lower today and are set to drop around 3% for the week as consuming countries plan release of 240 million barrels from emergency stocks, offset some concerns over the reduced supplies from Russia due to Western sanctions. Now, US West Texas Intermediate crude recorded a price surge of 0.54% to hit $96.55 per barrel. Brent crude now sells at $101 per barrel, recording an upward price margin of 0.47%. Bonolights performance is still in the red territory with a price dip of 5.40%, selling at $97.89 per barrel. And for the OPEC basket, crude oil dealers offer $106.10 per barrel, recording a decline of 1.76%.